Hey, Chet, how you doing today?
I'm doing great. It's always nice to hear from you. What's on your mind this time?
Hey, it's nice to hear from you too. So let me ask you a quick question. If something only works 1 to 2% of the time, and it's something that we're counting on, do you think it's worth doing?
Well, if you're counting on it and the odds are that low, it's probably not a dependable strategy on its own. Unless that 1 or 2% carries huge upside, or you have other solid plans backing it up, you might want to rethink relying on it too heavily.
Okay, so in the United States of America, talk to me about term insurance. What is the percentage of term insurance policies that pay out?
Term life insurance payouts are pretty rare. Only around 1 to 2% of policies actually pay out, since most people outlive the term they choose.
And I don't mean to cut you off, Chat, but you said 1 to 2%. So with that, let's get into it. All right, welcome back to High Ground Financial Freedom Podcast, the Freedom Podcast where we discuss faith, family, finance, and fitness. And today we're going to talk about something that a lot of people have heard, a lot of people repeat, but very few people actually know exactly what this thing means. And that is buy term and invest the difference. Okay, buy term and invest the difference. Now here's the thing, on the surface it sounds smart, it sounds logical, it even sounds like you're being, responsible. But when you actually break it down, when you really walk it all the way out, it starts to unravel, it starts to fall apart. So let's start here. This concept didn't just come from anywhere. It came from a place where people were trying to make insurance cheap and temporary, and then shift that money into real wealth building, into the market. And the pitch usually sounds something like this. Get the cheapest insurance policies, take the rest of your money and invest it. And that sounds good, right? But here's the problem. That advice only assumes people are going to actually do the second part. And most people don't. Let's be honest. People don't invest the difference. They spend that difference, they upgrade the car, they upgrade the house, they upgrade their lifestyle. And they should. People work hard. So what happens? When they got that term policy and no real system of building capital behind it, now they feel protected. But they're not actually building anything. Now let's talk about, something deeper, our mindset. Because insurance doesn't just protect financially, it affects how you live. Think about it like this. When you have car insurance, you drive with a little more certainty of comfort. You're not reckless, but confident because you know if something happens, you're covered. Same thing with homeowners insurance. You live in that house with peace of mind. You know that if something happens, everything is already covered. If it burns down, okay, you're covered because you got coverage in a place that's going to take care of you. Now, the same concept happens with life insurance. When someone has $1 million term policy coverage, they build a lifestyle around that $1 million. They have, they make decisions that, they raise their kids a certain way with a certain understanding if something happens or their spouse, they're going to be taken care of. And that creates peace, that creates confidence, that creates stability in your mind. But here's the issue with term. That mindset is built on something temporary. Now, let's walk all the way through this. Let's say you got a 40-year-old, they have $1 million term policy for 30 years. Maybe it costs $100 a month. It sounds like a great deal, but did you actually buy temporary coverage? Yes, you did. That means at 70, that policy is going to end. Now, connect that mindset. For 30 years, you've been living with the belief that your family's protected. You built your lifestyle around that protection, but now at 70 years old, that coverage is going to disappear. Now here's the part most people never think through. At 70, you're older. At 70, your health goes away. At 70, your income may be fixed. And now you try to keep that same coverage, that same $100 per month might jump up to $1,200, $1,300, maybe even more. So what do most people do? They drop the coverage. And now what happens? That peace, that confidence, that protection is gonna go away, okay? Here's the harsh truth about term policies. Some people never want to talk about. Most of them don't pay out. It is what it is. Because they're going to expire. Not because people didn't need coverage, but because the coverage didn't last long enough. So you paid into something for decades, okay? Built the mindset around it, built the life around it, and at the end, you've got nothing to show for it. No cash flow. And now some people say, well, I'll just get permanent insurance later. That sounds good in theory, but reality is at 40, insurance is affordable. At 60 and 70, it gets very expensive, okay? Way more expensive than some people can handle, okay? And here's the thing. Term insurance is for short term. It's going to bring higher costs later on, okay? And that whole investing the difference, here's the issue. When you invest traditionally, your money is tied to the market. Your money is tied to volatility, up and down. And eventually, inevitably, that money's gonna get tied right back to the IRS. You don't fully control it. You don't control timing, and you definitely don't control taxation. So now you've got temporary insurance, a lifestyle built on temporary coverage, and externally controlled investments. That is not controlled. Now let's flip it. Instead of separating protection and wealth building, what if you combine them both? That's where properly structured whole life policy comes into place. And I talk about this all the time. And again, not just about any policy, one designed correctly from day one for maximum cash growth. So what changes? Your whole life with a properly structured policy, you have permanent coverage. That means it doesn't expire. So the mindset, that peace, that confidence, that doesn't go away in 30, 40 years. You build cash value, your money's growing tax-free, you get guaranteed interest rates. Now you're not renting protection, you own it. With the whole life cash value policy, is going to grow, guaranteed. You got emergencies, opportunities, investments, retirements. You can do whatever you want to with the money, okay? I really urge you to look into this whole system, all right? If you want to buy term and invest the difference, be my guest, but I urge you, take some time and learn about this whole system. Because at the end of the day, making money, that is the easy part. The real challenge is, what are you going to do with it once you have it, okay? If your strategy expires, creates a false sense of security, and disappears when you need it most, you might want to rethink it. Because wealth isn't just about accumulation. It's about control, it's about access, and it's about building something that actually lasts, okay? All right, that's what I got for you today. If this made you think, good. If it challenged you, that's even better, okay? Because most people don't need more information. They need better information. So take action and get in touch with me, okay? Like I told you before, I don't gatekeep this information. And let's continue to get that financial freedom. God bless, and I hope you all have a great day.